The Meltup Part
Yeah,
5.
that's it.
Is this the conclusion of the series?
This will be. I'm planning on that. Yeah, unless something comes up today that makes us do part 6 or part 5.1 or whatever we decide to call that one.
These days, you never know, my friend.
Mm-hmm. That's it. I mean, it's not like there's riots in Los Angeles or something.
Yeah, I added a little, inserted a little picture from that once. I thought that one that I thought was really compelling.
Awesome. Looking forward to that. So, how you been, man?
I think good, better than I
Good.
deserve. As always.
Awesome. Glad to hear it.
My brother graduated from the academy. He is now a special victims unit probation officer in the state of
Okay.
Tennessee,
All
and
right.
he's honor graduate of his class.
Awesome. Good for him.
Yeah, man. So very proud of Jeff, and I mean he's still bringing it in his 50s and crushing it. So
Yep.
couldn't be more proud of my baby brother.
Awesome.
Michael
Excellent.
Gentili's on. Says good morning, and who else we got on?
I thought he was saying General Motors to us. I must be old or something. So I see Will Rhodes is on. So currently we're 50-50 on Will's.
He's got a number up here, 2269. What is that?
2269. That I believe that that's his IQ, isn't it? He's a smart dude.
Probably. He's a smart guy.
Yeah. Now that's his coin number for the American Warrior Society coin members. Everybody gets a coin number. Mine's 426. And that gets you access to the training vault. Start off with the assessment, figure out where you're at. Then you can dig into medical, BJJ, white belt to blue belt, rifle, pistol, shotgun, competitive stuff, if that's the way you decide to go to hone your skills to better protect your family.
Speaking of guys that are still getting after it, man, even into middle age, Bruce is on this morning. He is up there in Michigan. He's coin number 41. I ran into Bruce, man. I hope you don't mind me telling the story. I believe this is where I met Bruce up in Colorado. We were attending Marshall Blade Camp at the same time and ran into each other at a place where where adults can get refreshments. If you know them.
Yeah.
Yeah. And he was up there attending the course. And so he's still training and getting after it and doing the Lord's work up there. Derek is on, and Will says, got to be smart if I have a coin number. That's correct.
That is correct. So awesome. Well, let's dig into this here.
Meltup Part 5.
This should be the final one unless something comes up today. I'm going to apologize up front. I forgot now who it was asked about bank derivatives 3 shows ago, and I still didn't get to it. So it'll be first up next week. This Meltup thing and life has gotten in the way of the time, so I do apologize.
Bruce says, yes, sir, and it was my pleasure to meet you. It was an honor to meet you, sir. I see that Manhar is just like the show, and if Manhar, if you're still on, I would love to sit down with you again, and let's get reacquainted with what's going on in your country, South Africa. They're having some bump ups against Donald Trump and some other things that's going on there. I'd love to dive into that, sir. Open invitation. Just hit me up if you're down with that.
That would be a very interesting show to see how it's working there.
Yeah. So like I said, before we get into today's show, and Will's got a really good show for you. I kind of looked over it. Let's not forget to keep the officers in our prayers today that are out there doing God's work in Los Angeles. And let's hope that this scourge is not spread across our country like it has a tendency to do. You know, the last time LA burned back in 92, for those of us that are old enough to recall that time, it led to 63 deaths, you know, almost 3,000 injuries, over 12,000 arrests, and in 1992 over $1 billion in property damages. And why? Because an intoxicated felon, ex-con, decided to run from the police and then fight the police when he was pulled over. And then those officers who used force against Mr. King were ultimately acquitted. And I think everybody forgets that the 2 occupants in Rodney King's vehicle, they followed officers' commands, prone down, didn't get a scratch. Yep. Rodney King chose to fight. And let's face it, man, using force on another combative person always looks bad, right?
It does. Yep.
It always looks bad. So, and was that worth the death of 63 people? You know, and look at this, man. What the hell is this? You want to be in America? but
Yeah.
you're raising the Mexican flag. I mean, is this an invasion? What is this?
I've never understood that. And I think it was a text thread with you and Dr. Fuller, who I see on. Good morning, sir.
Morning, bud.
Last night. I've never understood that. If America got so bad that I decided to uproot my family and go somewhere else because I thought it was a better future for my children, and I got there, I'd be waving their flag.
And that's what previous immigrants of this country have done.
Yeah.
Am I right?
Yes, absolutely.
The
I mean,
first generation has a hard time, moving from
mhm,
Italian to English or from Slovakian to English or from
mhm.
whatever. But by the second, third generation, man, here they are.
Yeah, absolutely. And I can remember hearing stories, and some of them are anecdotal because they're in, textbooks or interviews where it's like the first generation wouldn't let the second generation speak the home country's language, if you will. It's like, no, you're an
Mhm.
American, you speak English.
Right.
And now it's just the opposite. In some cases, like, no, don't actively do not become American. Well, where's the melting pot there?
No, and it's like if you like Mexico so much, buddy, especially in LA,
Yeah,
jump on the 5 and head that way for about an hour and a half, and you'll be right back into the warm embrace of Mother Mexico.
yeah, exactly.
So you're here
So,
for a reason, brother. Welcome to
hmm,
the country. Assimilate. Oh, but
yep.
you're here illegally, and therefore you have no stake in the country that you're burning to the effing ground.
Yep. So
What's
what's
Dr.
Dr.
Fuller
Fuller?
say?
He says he agrees with me. That makes me smarter because he's a smart guy. But we've seen these people actively encouraged to avoid integration by political leaders, media, school systems, and here we are. Yes,
Well, yeah.
absolutely.
So it sounds like he's saying they're just useful idiots, which is probably
Mm.
right.
Yes, it does sound that way.
But
So
why would an American political party foster that sense of division for
votes.
votes? I mean, is that really what it is?
I would assume so. It's same reason there's left leaning NGOs on the border. Here's how you get asylum. Say these words, and handing out, um, I guess I'll say propaganda about Team Blue.
Yeah.
It's all. I mean, if illegal aliens got the right to vote, it's going to shift it to a permanent blue country for a couple generations.
Well, and Tammany was out there on the docks as the Irish were coming in waves, handing out soup and bread and hot
Hmm.
tea and stuff like that. And vote Tammany.
Yeah.
And I mean,
Yep.
it's the same kind of thing, and it's the same. It was Democrats then, and sadly, it's Democrats now. Not to make this a
Hmm.
political thing, folks, but I'm open to
Hmm.
if you tell me there's an instance of this being the right, I'm all ears. But
Yep.
Ted is on. He is coin number 1460. What's getting wet in central Mississippi? Yeah, you guys have a storm coming there. Mr. Mark Hamilton is on from beautiful Canada. Hopefully, Canada has not fully fallen, but the indicators I see are not well, sir.
Hmm.
Don is on from Northwest Montana. Jerry is on here in beautiful Tennessee. Good morning, sir. Coin number 197. Brian is on North Texas. Alan Kelly. Good morning, gents from occupied Virginia. Good morning,
Hmm.
gentlemen. Got a great show for you today. That's enough about the riots, man. I just want to kind of let's keep
Let me
these agents in our thoughts and prayers because they're throwing rocks at their cars as they're running by. I mean, it's unbelievable.
let me throw a couple things in on the illegal immigrants and the voting Democrat.
Mm-hmm.
I bet if they were coming across and voting red, there'd be a spin that way, right?
Yeah.
Now, Team Blue is obviously actively seeking to bring them into their fold, but let's also remember this last election with Donald Trump. Excuse me. He swung more minority votes, specifically Hispanic,
Mm-hmm.
than any other Republican candidate ever has. And I would be willing to bet that's shaken Team Blue to its core. So,
100%. But again, I gotta think a lot of the moderate liberals, if there are still any left, they
mhm,
have to see this and go, this is we can't sustain a country like this. I mean,
yeah,
this is not sustainable. And what kind of positive impact does this have on your party when this is running in the media?
mhm,
I don't get it. But Michael Gentili says a weak, distracted U.S. provides all manner of opportunity for people like Soros or the CCP. That's right.
mhm,
I'm sure our enemies love this. Ted says if illegals are gone, the GOP gains 27 House seats. It's all about power.
There you go.
What does Don say?
It says the left believe that they get the country converted to their socialist utopia. They'll be part of the more equal pigs. Yep.
And it's a reference to Animal Farm, which is a fantastic book. If you haven't read it, please read it. It's fantastic. Dr. Fuller says, just got home from Vermont. Those Canadian wildfires have the skies there looking as if under a thick layer of fog. Stay safe, Canucks.
Yep. Yeah, we deal with that here in Wisconsin. It's dealt with it last year and this year, and it's I wish it would stop. It doesn't always smell very good. It smells like burnt plastic some days.
Yeah. So Meltup Part 5. We're starting here with the Fear and Greed Index, as well as you threw in the debt clock on us today.
I did. Yeah, because it's going to play in to some extent. It's going to play into a lot of things here pretty soon. I see John Schreiber's on from Yukon, Oklahoma. Good to see you, sir. Fear and Greed Index 63. It's come down a little. I saw it wasn't Scott Bessent. I forget the gentleman's name. Part of the Trump administration floated out there yesterday saying we are, how did he put it? He said he was comfortable saying there would be a trade deal with China sometime Monday, something like that. So I would expect to see that, if not today, probably this week for sure.
Hey, who's this 21-year-old intern that's managing counterterrorism for the entire United States, and the guy's never had a job?
Beats me. Hadn't heard about that one.
Oh my God. If Dr. Fuller's on, if you could throw that photograph up, we'll try to get it in here where everybody can see it. It's absolutely freaking, it would be comical if it wasn't true. So
yeah,
it's like, come on, man.
And it just goes to show it's both sides, you know?
Yes, exactly.
You know, and it's just like, who looked at that? And even if, let's just say this 21-year-old is the smartest guy ever, has a photographic memory, has read every book and talked to let's say just the optics.
Yes.
Right? I mean, come on. Yeah. Somebody needs to stop the planet. I want off. So national debt, I snagged this yesterday mid-morning. $36.9 trillion in national debt. The part I wanted to really point out here is U.S. federal debt to GDP ratio down there at the bottom of that particular screenshot. 1960, your U.S. federal debt to GDP was called 53%. 1980 was down to 35%. Now, that means the debt went down as a percent of GDP. Now that doesn't mean the overall debt went down. It just the economy can grow enough to drive that debt to GDP number down. So
well, we're doing good. We can go and stop the show right now. Then thanks for coming, guys.
All right, yeah, good seeing y'all. Take care. Well, so it can be done. You can grow your way out of debt. I mean, if we think of that as a person, if you're say you got a $100,000 mortgage and you're making as a family $100,000 a year, and one of the parents gets a big raise, and now you're making $200,000 a year. Well, now your debt to your income went down, right?
True. Yep.
Yeah. The problem is, I'm gonna burst some bubbles here, or maybe anger some people. It ain't gonna happen again with the United States. The last time this actually worked, the lowering taxes and growing the economy actually worked was under Reagan. But that's when we went from the highest marginal tax rate at 90% down to 28%, 30%, whatever it was. It was a big move. Moving a couple points on this. I mean, I'm all for lower taxes, but the bottom line is it's not going to work like that again. So the only thing that's really going to work is decreased government spending. Okay. The bottom one, of course, we have touched on before. These are the top 4 budget items. Medicare, Social Security, pretty much tied. And then interest on the debt. They've still got his defense next, but interest on the debt's a bigger number. That should scare everybody.
It does.
I mean, that's the third largest budget item. Is
because what percent of the GDP is servicing debt? It's a strange. It's unbelievable. Is it bigger than the defense spending?
It is, yeah. As you see there, just larger. It's $1 trillion versus 900 billion. So
there we go. Yeah.
Yep. So if you look at it, it's 2/3 of take your pick, Social Security or Medicare is interest on the debt. let rates go up a couple of points and see what happens.
It's unsustainable, folks. It's just
Absolutely, it is. So that's
it's
why
a
we're
math
getting.
problem.
This is why we're talking about the melt up, because there's only one way they're going to solve this, and they're not going to. It may be a soft default on the debt, like August of '71. That was a soft default on the debt, but in the end, they're going to print money. That
Which we know
it's the only
doesn't
way
go
out.
anywhere good.
Yep, it doesn't. Unless you're ready for it. It can personally go somewhere good. Overall, as a country, I'm not for it and don't want it to happen. But on a personal level, if you're ready for it, there's money in them dar hills. So,
Hmm.
um,
I'm going to show
but
this guy real quick before
okay,
we jump off of it.
yeah,
Gentlemen, meet your new counterterrorism czar here in America, 21-year-old
oh
Mr.
my
Thomas
gosh,
Fugate. We're all very proud of him. Um, if he looks like a smarmy little prick, he may be. I don't know. Don't know the guy.
does he got a
Um,
note to be out of school?
yeah, I mean, when you think of all the folks that you could have picked who were the real pros during the GWAT, who may or may not know something, the Council of Foreign Relations. I know some outstanding two-star generals that would be fantastic for this position. But let's pick a kid just graduated college on his first job outside of mom and daddy's house, and
Yeah, thanks for digging that up, Dr. Fuller. Yeah, I mean,
yeah,
it's just
thanks.
like, yeah, it was like when I was a young pilot, I would have, I've got a baby face anyway, but I actually had a passenger one time ask me if my mom drove me to the airport.
Ouch.
Oh, I laughed. It was hilarious. She was about, I don't know, 142 years old. It was funny. It was hilarious. So you gotta have thick skin in this world, you know.
What's Dr. Fuller say?
He says these grand fiscal issues feed directly into political decisions and street violence, making it demonstrably relevant to a self-defense podcast. These things have real-world impact. Yes, sir, they do.
Hmm.
And I couldn't agree more. Thanks for bringing it up that way, because you know you could be in fill in the blank city when something starts.
Yeah.
And what are you going to do? Even if you're not in the riot location, look back to the summer of love. You didn't have to be right in the middle of the riot for it to become a threat to your family.
You know what we should do, man? Maybe do it next week. I've got my go bag, but I also have a little bag that's just for this. And I got a flashbang, some orange smoke, and a big can of orange pepper spray fogger. So if I throw the smoke and I start fogging people, you won't know what's happening. A couple of flashbangs, a little small bulletproof vest, and some other things to help get me and my family out of this, just in case we happen to turn the wrong turn and
Yeah.
suddenly your vehicle's surrounded. Man,
Hmm.
I'm not going out like that. I don't know about you, and
No, it's
not happening.
I may lose, but they're gonna know I was there. Um,
Yeah. And these
the
people are freaking cowards, man. One on one,
yeah,
they're not doing jack. When you're in a
yep.
mob, but that's just it.
Well, and let's remember during the summer of love, it started pushing out in the suburbs.
Yes,
And
it
then
did.
suddenly, the city fathers, I'm thinking of Minneapolis in particular, where that started to happen that I'm aware of. Suddenly the city fathers went, oh, okay, hold on. It's
Yeah.
one thing if you want to burn down over there. If you start coming out here, now we're going to get serious.
Yeah. There was a famously during the floods in Nashville, a bunch of guys got their golf carts together, and they put up big signs in their neighborhoods, you loot, we shoot, and they're all standing
Mm-hmm.
there with their weapons and putting it on social media like, hey man, you come here, brother,
Mm-hmm.
you're gonna be leaking when you leave.
That's
uh,
it.
I gotta be honest with you, man, I'm kind of upset when I saw this. I didn't authorize you to use an actual photograph of me. um, Everybody knows your old pal Rich Brown is America's favorite cymbal banging monkey. However, that image is copyright.
Oh, my bad. So I'll
And,
I'll,
yeah,
I'll send you $1 after the show, brother, for the actually I'll
that's
make it
actually,
two. I'll pay the penalty and the original licensing fee.
yeah, I love, I use your line all the time, and I think you may have got it from your attorney. Payable by fine means legal for a price. So for
That's it.
$2, you can use Rich Brown's image anytime you want.
All right. So here's our disclaimer, guys. We're going to talk about some financial stuff today. We're going to be a little more specific than I generally am.
Mhm.
So don't construe any of this as personalized financial advice. He's a symbol banging monkey. That's a real picture of me operating heavy equipment. We're not the brightest guys out there. Okay. Consult with a professional, because it's not just your 401k or IRA. It's also how it plays into how you want to retire. What do you want to leave for a legacy? There's a lot of stuff that goes in there. So if you take this as personalized financial advice, you're stupid.
Yeah. Now, in truth, you may be a heavy equipment operator, but you've never landed one of your aircraft in the Hudson, have you?
Not that you can prove. So
What does Don say, man? This is a
it
interesting
says
comment.
debt to GDP at 122% plus ought to be reason to replace the entire House of Representatives. Yep, I agree. But I was waiting to
Look at
use this line at some
I like
point.
that. Let's make it a constitutional amendment, Will.
Yeah, yeah. Good luck with that. Like
Yeah,
term
right.
limits or not disallowing insider trading. But here's something I'm going to bring up, and I'm guilty of this. You're guilty of this. Don is guilty of this, and since you just brought his comment up, Dr. Fuller is guilty of this too, and so is everybody on Team Blue as well. When was the last time you heard about somebody not getting reelected because they spent too much money?
Never.
Exactly. So who can blame them, really?
Exactly. Yeah, Dr. Fuller said it strengthened when the riots moved into the suburbs. It strengthened his argument with his wife to buy a flamethrower. Almost made it. I think that. I mean, hell. I mean, the Marines used them throughout the Pacific, and it worked, right?
Yeah,
So,
it seemed to be pretty effective.
I don't know why they ever got rid of that, man. They should bring that MOS back. Let's have the flamethrower. I think it was an 0351 back, Assaultman
Yeah,
back in the day, but
and
we need that.
and it was assaultish, that's for sure.
I bet it would clear out those damn riots in LA real quick.
Yeah. Now they in fairness, they do seem to like setting stuff on fire. So
Yeah, let's give them a hand.
yeah. So so this slides from last week's show to segue into this one from part 4. Part 2 of the show last week. We're saying this is the challenging part. Okay. And this is the challenging part here we're talking about is holding assets through the melt up. And let's remember, going back to our earlier shows. Sorry, guys, allergies are kicking in here. It's going to start with some sort of economic problem. Don't know what that's going to be. Don't know when that's going to be, but it will happen. It always does, right? Everybody can see how stretched we are right now. And this is the part that's going to separate the people who understand the system from those who don't. And you can guess who wins because the system is rigged. Period. It is.
Yeah.
The system is designed for 2% inflation on average. That means your money loses purchasing power every year. So, therefore, if your money is going down in value every year, then assets priced in that currency are going to go up in value every year.
Mm-hmm.
And I'll be first to say this, I did not truly understand the system in the housing crisis. I started to get my arms wrapped around it during COVID. But now I think I have a much better understanding. I won't say I got it, but I got a much better understanding. So this is the part where we hold. Okay. And we're going to talk about some techniques to do that. And I mean, if you think about it, think about the housing crisis, brother. When that hit and the S&P went down 57%, in 4 years, you were back to break even.
Mm-hmm.
Now, if you're 64 years old when that hits, that could destroy a retirement because you're almost 70 by the time it comes back, right? So you need to have some protections in place, okay, and some diversification, which we're going to talk about here, so that the idea is that while your stock portfolio the stock portion of your portfolio might have gone down 60%, something else is going up to help at least offset that. So we're going to talk about that, and we're going to talk about position sizing. You run, like if I was 22 years old right now with what I know right now, would I be running a portfolio the way I am now? No, I'd probably be 90% stocks. Yep. It's just time, right? Even if it goes flat for 13 years, well, heck, you're 35, you put a bunch more money into the system in the meantime, right? Mm-hmm. So that's a long-winded saying, stay in. Right now, that's not to say you can't take some protections or take a little bit off the table. In fact, we're going to talk quite a bit about taking a little bit off the table here later on and how that can be done to build substantially more wealth and have a good sleep at night factor in between. And there's something to be said for sleeping at night.
I agree.
So,
and again, I before we move on, I would recommend one more time ringing the bell if I had one. Read the Psychology of Money. A buddy of mine sent me, he's like, I know you've been talking about it for years. I'm finally reading it, and oh my God, it's really opening my eyes. So what is your relationship with money?
Hmm.
Everybody's got one. It's different. Just you need to know what yours is and what stage, because you make a great point, what stage you are in your life.
Hmm.
That is so freaking important. And a lot of people overlook at it as if it's one size fits all. It's not.
It's not.
No.
It's not even close. Even within that, there's risk tolerance, right? You and
Yes.
I are on opposite ends of the spectrum on risk tolerance.
Even though we're the
And
same age, educational, and blah, 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 we're
yep,
still different.
yeah, exactly. People are people. So, so the system is not designed to do these things, among others. Okay,
Hmm.
the core of it is the currency system we have, and all currency systems are designed to constantly erode the purchasing power of the currency through inflation, because that helps grow an economy in raw numbers. Okay,
Now, did
it
you pull
reward.
this somewhere? Or is this your take?
I made this up.
Okay, cool. All right.
Yep. It rewards those who hold assets. Now
Hmm.
let's put that in perspective. Think about, the grandma and grandpa who bought the house in Los Angeles in 1950.
Hmm.
They done okay,
Oh, yeah.
right? That house went from being worth, I don't know, $11,000 in 1950 to multi-million dollar home today.
Hmm.
And this has been years ago, but I remember I was talking with a friend who um, lives in Los Angeles, and his home was, I think it was 2 bed, 1 bath, 950 square feet, something like that. This was either, I think this was right before the housing crisis. It was like 1.1 million back then. Crazy.
Yeah.
But now to buy that home, you either have to stretch your family's budget to the max or have really good paying jobs. But the
Give it a quick anecdote on that,
Please.
since you shared an anecdote with this. there's East Coast Marines and there's West Coast Marines. There's a giant Marine Corps base, Camp Pendleton, which is sandwiched in between San Diego and Los Angeles. And then there's Camp Lejeune, and that's the two giant Marine Corps bases where about 95% of the Marine Corps is housed at either one of those. And the other one, the East Coast, is at Jacksonville, North Carolina. You've probably heard of it before. It competes annually with, is it the anus of the world, or is it the armpit? So in one place, Jacksonville, housing prices are flat to down. Camp Pendleton, of course, it's going crazy, and it has always. So my point of saying that is, you could always tell a guy who's a West Coast guy, because when he sells his house and comes East Coast, suddenly he's wearing suits, he's got a
Mhm.
Rolex, all these trappings of wealth. I'm like, what happened? Like, well, let's just say I did really well in my house.
Yep.
Because if he could homestead it for just a 3-year tour or a 6-year tour, he's selling out and making
Hmm.
six figures
Yep.
on a freaking house that he had to live in that the Marine Corps paid for through BAH. I mean,
Yeah.
it's crazy.
And what work did he have to do on that home to make all that money?
Nothing,
Nothing.
nothing.
General upkeep. That's it.
So holding assets, folks.
Exactly. Got to hold assets. Now, there's a lot of different assets in the world. There's stocks, there's bonds, there's crypto, there's precious metals, there's a lot of different assets. But if, like we looked at last week, if you go back over time, assets go up in value over the long run. Period. But it's not always because the asset's going up in value. A big part of that is the currency is going down. And it didn't make it in the show because I didn't think to look it up till late last night. But I found a website, um, and it calculates stock market returns and bond market returns over time, adjusted for the increase in money supply.
Oh, wow.
And I went back and did February of 2020 to today, and the stock market's up. That's just before everything crashed with COVID. From then to now, I couldn't even tell you for sure what the raw numbers were, say for the S&P 500, but annualized, it's only like a 3% gain when you adjust for money supply.
Really?
Yeah, and we know the stock market, it did back years at 20%, but most of that was just the money supply changing. So when
Whoa.
when
So
when
if you
they
manipulate the money supply, man, you can really manipulate everything.
absolutely.
Wow.
And then it just goes on from there. So the system rewards those who hold assets, and everything is designed to get people to hold assets. All right, we're going to talk about that in the last one. It rewards those who utilize risk management. Now, you're going to get rewarded either way by holding assets. We can put it on steroids with a little risk management. And
Mhm.
that can be a little bit of taking profit here and there, like we're going to talk about in a moment, or it can just be having a good diversified portfolio.
Now, these 4 that you have here, are they in any order, or is this because this last one that you have here, leveraging the
Um,
tax code, and that could easily be number 1, right?
it a little. I think the big one, number one, is the big one. Okay,
Okay.
because that's the way the system works, and
Mhm.
I think that people who don't understand that that's what's going to happen,
Mhm.
get left out. So and the
I'll say
rest, I
this
think you
enough,
can make it.
a good tax accountant is worth every damn penny you pay that guy or gal.
Absolutely.
Promise you that.
Yep. And it rewards those who leverage the tax code.
Mhm.
You can legally get your tax bill very, very low, completely legally. Okay.
Mhm.
Most people in our society, um, think about the first about 50 pages of the tax code, which tells you how much you have to pay in.
Mhm.
The other, I don't know, however many pages there are, a lot more, tell you how not to do the first 50 pages.
Right.
Right. So dig into that stuff. Now we can look at, kind of your standard stuff. Own a home, write off your mortgage interest, write off your property taxes. Own a rental, do the same thing. Well, somebody else pays off the asset for you. The asset that's going up in value because of number one.
Hey, I'm gonna according to Google, the Internal Revenue Code (IRC) statutes. This is the official law passed by Congress as of 2022. The U.S. tax code was 6,871 pages long.
Hmm.
6,871 freaking pages long.
Yep.
Now, the online 2024 online version of U.S. tax regulations is 17,472 pages long. You think
Yeah.
you can do that yourself? Are you kidding me?
Yeah. You can do the basics and you can, depending on what your level of sophistication is, you can do a lot of
Like I
it.
said, yeah, you
And
can figure out what you owe them, but you're never going to
yeah,
figure out the rest of the stuff.
right. And a lot of that, it doesn't apply, say, to individuals because it has to do with, corporations and things like that. But
So maybe you
it's
need to
still all in there.
incorporate yourself.
Yep. Absolutely. LLCs for the win. So,
Amen, brother. Got 2 of
um,
them.
yeah, I can't speak to other states, but I know in Wisconsin, you give me, I think it's $135 in about 10 minutes. I'll have you an LLC.
Mhm.
It's not hard to do. And in Wisconsin, it's the Department of Revenue site. Pop on, make you an LLC, and you're off to the races.
Yeah.
What's Brian say there before we move on?
He says at 71 years old, mostly retired and with annoyingly persistent health issues, financial and life management goals are very different than just 6 years ago.
Yeah,
So this is something you
absolutely.
need to review annually. And I know that you do that, if not quarterly, don't you, Will?
I do. Matter of fact, I'm kind of in the stage currently. Thankfully, I don't have any health issues. I'm trying to pass on more and more of this knowledge to my kids.
Mhm.
Um, and part of it was I worked with a guy whose dad had done really well in the stock market, 80s, 90s, 2000s, like really well. I bet he passed away without telling anybody how he did it.
Are you serious?
Yeah. So,
Mm.
so I'm trying to, slowly educate the kids. They think I'm stupid. Can't blame them. So, but we're getting there, and it takes a long time because you got to build off that base. So,
Mhm.
what's Don say there?
Don says I used to have an accountant that measured the tax code in feet as to how many feet the bookshelf it took up in her office. Alan Kelly says that could be reduced to 50 pages max, but like you said, the system is rigged against the average civilian. I'm afraid
Okay,
to say
so
he's absolutely right.
let's dig into that just a little bit. Um, there's a guy, Bob Brinker. I'm guessing he's passed away by now because he sounded like he was 90 years old when I listened to his radio show 20 years ago. Investment guy. And he said a great line. He says, the best tax code money can buy.
Ooh, very true.
Right. So why are there carve outs? Why is there a carve out for mortgage interest? Because home builders at one point were suffering and they went to Congress and said, hey, if you make this tax deductible, we can sell a lot more houses. And they went,
Yeah.
there you go. And that's just point after point after point of that. So, what you also find is the more knowledgeable you become on the tax code, the less you care what they make the tax rate. because I'm not paying it anyway.
Yeah, exactly.
And if you go back to when marginal tax rates were 90%, everything was deductible for high
Exactly.
income folks. So there, if you look at the effective tax rate for the entire nation, the federal income tax rate is about 15% of GDP when you measure it that way. And it's been anywhere between 14 and 17 for the entire history of the country. So you can have all these debates and all this team red, team blue garbage. In the end, it doesn't matter because if they raise taxes, somewhere buried in that other 6,000 pages is a write off that offsets it.
And Dr. Fuller brings up the thing that I love to say, pretty impressive growth for the tax code, considering there was no income tax supporting infrastructure until 1913. Oh, the heady days of
Yes.
the early 1900s.
Yep. As compared to our time, known as the late 1900s.
Mm.
So, all right. So let's start digging in here because this is going to be a rather long show. I think we're like 24 slides. So,
Buckle up, folks.
yep, here we go. So the first part, and this is the part 2 here we're talking about. This is from the previous show. You got to endure volatility. And the best line I've heard of recent is volatility is the price you pay for long-term gains. This is, as you guys may remember from last week's show, this is the gold chart from Weimar, Germany. So this is in, I think it was called Weimar Marx at the time. The smooth outline is more of a moving average, and that's the chart. The smooth outline is the chart, the only part of the chart they will show when they're trying to sell you gold at 2 a.m. With some washed up actor. Okay. And it looks really simple, right? Well, look at the green points and the red points here that are circled. I mean, you started in 1914 with $1 in there. And in 1919, you've got $10,000. Now put extra zeros behind that as you see fit. You feel like king of the world, right?
Yep.
And then what? Probably not even a year later, it's cratered to that first red circle.
Ass, yeah.
Right? Gee, explain that one to the wife. Right?
Yeah.
And then it skyrockets back up and back down and back up. So volatility is the price you're going to pay for this. Someone who held on to this long term was able to put together enough money to do whatever they wanted, right?
To get the hell out of Germany.
Yeah, well, that's what I would do, but some did not. So now that said, there's ways to increase your sleep at night factor, because if you actually live through this chart, I'm guessing sleeping at night wasn't very easy for any number of reasons besides the financial side, right? So let's talk about how you can endure this a little bit easier. So this is going to get a little wonky here for a little while, guys. If you go to the next one, brother. All right. So first, we're going to talk about what's real diversification. Okay. So traditionally, and if you talk to most financial advisors, diversification, it's a mix of stocks and bonds. The 60-40 portfolio, right? 60% stocks, 40% bonds. Okay. Why has it worked for so long? It's worked since 1982 because money keeps getting cheaper. That's why it's worked since 1982. Why has it worked since 1917 when you look at a long enough time frame? Because the currencies become worth less and less and less over time. That's why. Yes, there's innovations and companies grow and new companies show up that do great things and all that sort of stuff. But the undercore, the core of it, the basis of it that goes on forever and ever is the currency is becoming worth less and less. Okay. Why may it not work the same way going forward? Well, let's face it, it's probably going to keep working for quite some time, decades. Nothing's going to replace the US dollar anytime soon. But why may it not work? Well, it may not work if interest rates go up. Look what happened in 2022 when Jerome Powell took interest rates from basically 0 up to 5%. Market went down 22% in a year.
I'm going to stop you there.
Okay.
Every time I hear somebody say that, it's not going to go anytime soon. I would throw in there that the only thing that could really upend it in a very cataclysmic way is a pure war with China, and we get our asses handed to us.
True.
And does that look like it could be anywhere near on the horizon? Sure. Even if they kicked it off with just Australia, who they're making moves on, or the Filipinos. I don't know if Giles on here, but or they, there's a reason why they're building these giant pontoon bridging ships as fast as they can make them. Now, why would they need those? There's only one thing, and that's Taiwan.
Yeah.
And Taiwan, just to give you a nice estimation, Taiwan, of course, is about the size of Tennessee. It's
Mhm.
not a tiny little island. It's a pretty substantial island. And it has, probably close to 10x the amount of people living on it relative to Tennessee. And so I just think, pardon me, it's a fallacy to say, it's not going anywhere anytime soon. Maybe our kids or grandkids will have to do it. All it takes is one black swan event to upend that philosophy. Because I agree with you in theory. However,
Mhm.
there are things, there are known knowns and unknown
Right.
knowns.
Yeah, you're absolutely right. Yep. Couldn't agree more. So,
Yeah.
um, bear in mind, even the war with China, if that were to happen, let's just say World War II was what, 4 years ish.
Mm-hmm.
I mean, we're looking at some time in there, some difficult times for sure. But it's not going to be an overnight thing, either literally or figuratively.
Well, let's go back to this chart.
Uh-huh.
Why are we looking at Germany? Because they lost. And then what happened? The Treaty of Versailles. And then
Hmm.
what happened after that? It
This.
doesn't take but what, 3 or 4 years
Hmm.
to wipe out the most dominant currency in Europe.
Yeah.
I,
And
I,
they wiped it out themselves and went back to losing World War One, and the they did it to themselves with money printing.
yeah,
And let's face it,
they had to.
World War Three kicks off. We're going to print money like, oh my gosh! I mean, we're going to long for the days of a trillion here, a trillion there.
Yeah,
We'll be talking quadrillions pretty quick.
absolutely. And Dr. Fuller has schooled me. It is not 10x. It's maybe 3x the
Hmm.
population size of Tennessee. Uh, but still, it's a lot of freaking people, man. And oh, by the way,
Yep.
it ain't just the 23 million people we're going to save. By the way,
Hmm.
it's the TSMC and all the
Yep.
silicone chip manufacturers that we need for our economy if we're going to continue to melt upward.
Yes. Absolutely. Well, the thing is, but the Meltup will actually go on steroids if something like that happens.
A war, absolutely, initially,
Yep.
unless we lose.
Correct. Unless we lose very rapidly. But even if let's say it's held to a regional conflict, not a full blown World War III type scenario. Look what the GWAT did to money printing.
Yeah,
Now that was over a 20-year period, and definitely not a near peer, of course. But look what that did.
yeah,
That was
yeah. They wanted
something
that
that was trillions of dollars of spending. Okay.
100%.
So in my opinion, which is worth half of what you're paying for it, real diversification. You got stocks and bonds. You got to be in those. They work. Okay. Then you got alternatives. There's the standard alternatives, gold and silver. You got crypto and real estate.
Mm.
Now, most people, quote unquote, invest in real estate if they own a home because, yeah, you got to have a place to live, but it's on your personal balance sheet, right? And you can
Mm-hmm.
also buy rentals. And we're going to get into a little something else there for real estate. And then we got a little twist as well. We're going to throw in
Ooh,
there. Okay.
twists.
All right. Stocks and bonds. All right. Overall, when the markets become volatile, you'll see flights to safety. Now, usually when people think about a flight to safety, they think about going to bonds or going to gold or fill in the blank, something like that. Well, even within the stocks, there's flights to safety. Okay. A lot. This will look like utility companies and consumer staple companies. Think Procter and Gamble, Johnson and Johnson, toothpaste, toilet paper, stuff you got to buy no matter what. Especially if it's COVID time, buy all the toilet paper you can get your hands on for some reason. Okay. Um, so this is, I mean, utility companies rates are guaranteed in most cases by state law that they will make a profit, and they pay a nice little dividend, 3-4%. So
Mm-hmm.
see Gal's on. Good to see you, brother. So these utility companies and consumer stable companies, you don't want to own these when the stock market's going crazy because you're losing out. Okay. But when times get bad, it's really nice to sit there and churn out a 3% dividend and a 2% annual gain, whatever it might be. Okay.
Mm-hmm.
Not going to set the world on fire, but you're making money. Okay. Bonds. Um, this has been in the past U.S. government bonds and highly rated corporate debt. So AAA corporate debt. So think about the debt from, try to think of a good example here. Say NVIDIA. Somebody who's got lots of money sitting around, they're going to pay their bonds off. Okay.
Yeah.
And they're sitting on a huge cash pile. They're gonna pay those bonds off. Uh, so put it in there, make your coupon on that, make your 2%, whatever it might be. But there's a twist this time around, possibly. How might the U.S. government debt look this time? Well, if they're printing money like crazy to pay those bonds off, which is exactly what we're going down the path of,
Mhm.
well, that may not look so good because you're getting repaid in these dollars that are becoming worth less and less. And let's just say right now, you lock in a 10-year treasury bond at 4.5% ish. And let's say in 5 years, inflation's running 10%. You're losing 5% of your purchasing power every year.
Right.
And you say, well, I'll sell the bond off. Well, the bond's gone down in value too.
Yeah.
Okay.
Who wants to buy the
So
damn bond?
exactly. So the length of the bond is going to matter a lot. Not financial advice. I'm staying more with shorter term bonds for that portion of the portfolio right now, because I'm only locked in for a few months or maybe a year. Because we don't know what's going to happen in that way. I don't want to be locked in for 10 years. Just don't want to go there. Okay. So this has been your standard 60-40 portfolio is what we're looking at. And it's worked for a long time. And it may continue to work for the most part for a while here until this crisis, whatever it is, happens. Now, like we talked about, there's going to be a crisis. There always is. And we can see it building, whether it's any of these threats we talked about or the proverbial black swan that we never see coming. Okay.
Right. Yeah, there's the things that we can see coming, we can easily forecast, but what can we not forecast? Sentient AI that starts shutting shit down. I mean, that's around the corner. You don't need to look far to see that. And we'll do a show on it because my son, who, obviously I've talked about it many times in the show, spent 3 years. He was kind of the machine learning expert. That's what those in the biz call it, AI, that machine learning. And I was talking to him over the weekend. I'm like, hey man, have you heard that AI started blackmailing the researchers? Did you hear about this?
I did. Yeah.
Yeah. He's like, no. I'm like,
Yep.
yeah, man. And so I'm like, Google it. We're driving down the road. And he's like, well, I need to read more. I need to read this paper because I just can't believe that. I'm like, well, freaking believe it, brother.
Yeah.
Don
Don
says,
say it. I think it's a great point.
says, think about what 9/11 did to our economy and the market. World War III-ish could be more a series of terrorist attacks that go after our infrastructure like electrical grid. If domestic security begins to look questionable, people are going to be looking at protecting what they've got. 100%.
Well, and this is bring his comment back up because this is a
Sure.
great point towards what has been safe in the past may not be safe again. I just said utilities are a flight to safety. Well, what if it was an attack on the electrical grid? Do you think utility stocks are going to do well?
Hell
No, because they just took on a bunch of expense, and until the government bailout comes in through printed money to rebuild all that, their stock is not going to do well. Look at ticker symbol EIX, Echo India X-ray, Edison International. They own all, like in the Chicago area, is Con Ed, Consolidated Edison. They're out in California. They're all over. They own a bunch of companies, all utility companies all over the place. And one of their utility companies was responsible for the latest fires in California. So you see what their stock did. Now, if you scroll out on that chart that I'm guessing you're looking at, scroll back to the last, do a longer term chart.
Yeah, I'm looking at 5 years.
Okay. It may have to go back even further. You're going to see another big drop back there when one of their utility companies, I think it's Pacific Edison, caused the last set of wildfires in California, the one before this one, right?
Yeah, I see it.
And their stock came back over time, didn't it?
It does, but
and in the
falls
meantime,
off a cliff there for a minute.
And then it pays a nice 5% dividend in the meantime. Yeah. Guess who bought a whole bunch of that?
I would imagine.
I'm sitting here making a nice little dividend, better than a stock portfolio. And it's just, they're going to come back because people say, oh, we're going to sue that utility company. You know what they're going to do by law? Raise their rates.
Mm-hmm.
Don't hate the player, hate the game.
Yeah. Over all time, that ticker symbol EIX is up 296%.
Mm-hmm.
And right now it's trading for a low $53.76 a share.
Yep. Just sit there and churn.
Yeah.
It pays out a nice little dividend every quarter, and eventually it's going to come back just like it did last time because
Yeah.
they're guaranteed to make money. Now, EIX, Edison International, this is the holding company for all of them. So they're enduring a lot of bad press, and they're going to endure a lot of expenses through lawsuits from the California thing. And then they're going to go to the state of California and go, we're not making our legally guaranteed profit margin. We need to raise rates. And the state of California is going to go, okay.
Yeah.
And then when those numbers start rolling in, you're going to see some great returns on that stock. So, yeah.
I think I go back to the volatility. We keep mentioning China, but of course, Iran and its proxies are on the table, which kind of speaks to what Don's talking about.
Absolutely.
Gaza, Hamas, Hezbollah, those are unknown, and then of course we got Russia. We're still waiting on what the hell they're about to do to Ukraine over the brilliant strategic move they just did, and they got to be pressuring China, so
Yep.
I don't know. I think we're coming to a head, whether it's going to pop now or 2027, but sometime before the next election.
Well, and this dovetails nicely into the discussion we're having about having some true diversification in here. Okay, what's Alan have to say, and then we'll chug on.
We are looking at domestic security being questionable in some jurisdictions where there is no consequences for your legal actions. Boy, you're right about that.
Absolutely.
And if you're in those blue states, you got to be thinking about it. And I ran into a guy here in Tennessee, just another little anecdotal piece of information. He came down from Connecticut, and he's like, I can't live like that anymore. I'm born and raised there, and he's 80-something years old, and he moved.
Yeah.
And I'm like, you're an older guy. Is this anything you have seen in your lifetime where people are moving from one state to another? And he's like, never. And he goes, but I just can't do it. And I keep encouraging my kids to get the hell out of there.
Yep.
So.
All right, moving on here. All right, so alternatives in the past: gold, ultimate flight to safety, then and now, period, dot, end. Okay. Silver is kind of the also ran flight to safety. More volatile than gold because gold is primarily just a precious metal, some jewelry. Mainly it's a store of value. Silver, though, has industrial uses, so it comes and goes with the economy. We're going to dig into that industrial side here right at the very end of the show. Okay. Real estate, for most, this is your primary home, right? For investors, it's been hit and miss depending on where you enter the cycle at. Buy in big in 2006, you had to sit for a while, right? And endure some big losses. And it's not just, the house went from being worth $300,000 to $150,000 for a rental house. Also, your rents are going to go down during that time too. So you could be feeding it every month instead of taking vacations with the family. So timing matters in everything. And a long enough timeline, it doesn't matter because the value of the currency keeps going down. In short term, say within 10 years, which matters to guys in their late 50s, right? Timing matters. You wouldn't catch me buying anything in Florida right now with what that market's been doing and continues to do. But Midwest and Northeast, there's a supply constraint of housing. So
it's not just the market; it's other things, and especially Florida. You mentioned, you got insurance companies that are really wreaking havoc with some buying decisions down there, and will continue to do so for a long time.
Yep, for sure. And it's just flat pulling out of the market.
Yes, exactly. Somebody will fill the void, but at what cost?
At what cost and how long?
Yes.
And if a person has a mortgage on their home, you have to buy the insurance or you're going to get foreclosed on.
All the more reason to pay your house off.
Yeah.
Never mind. What does Jerry say?
Says all the utility has to do for the state Public Utility Commission, I believe that is show they've done a risk analysis, created a mitigation plan, have a third-party insurance officer, audit the business to support the raising of rates to offset the cost. The utility never loses long-term. He says he worked inside the beast executing these very risk plans in California. Awesome.
Wow.
Thank you for sharing that, Jerry. That's yeah. So this is where, they win.
Was it warm under the dragon's wing is what I want to know.
Well, and here's the thing. We as citizens benefit from this too, right? Because can you imagine volatility inside the utility business? Are the lights going to work today? Did they go out of business overnight? Nobody's going to put up with that. So it's a give and take.
Mark says, do you have home equity tax? And
No, sir.
no, of course, but it's jurisdiction dependent in some regards. And here's where I'm going with this gentleman that moved here from Connecticut. He's like, we had a beautiful, he's had an incredible home here in Tennessee. And he was telling me, we had a great lake house and this and that, but they kept raising our view tax. And I'm like, what's a view tax? He's like, if you have a view of the water, you're taxed on that. Because I was paying $3,000 a year just for my view tax to see the water. So it's like, and you do enough of those cuts, and it's like, hey man, like no.
Yeah. Yep. And that's just it. So do we have an equity tax, Mark? We do not. And I'm guessing it's the same in Canada. We have property taxes, which never go away, right? And it's out there.
It's relative though. It's relative to where you live.
Absolutely it is. But the part I always chuckle about, and this is an out there thing. I'm not saying this is day to day for most people. If you think you own your home, don't pay your taxes for a couple of years. See how much you own your home, right?
And can I just give a personal thing? So like we're talking about real estate, and just last night at dinner, my son-in-law, we have a big family and the whole table's full of people, and my son-in-law comes over, is like, hey, Rich, when we get done with dinner, I want you to help me use your Google Foo and let's find these people. And what he's done is he's looking at fallow properties up and down our road. And he's pulled the court records. And so last night I'm going in there and getting email addresses for these owners of these property that live wherever and that are now 80 years old. And we're trying to do a little, like, got some dry powder. Let's snatch these things up. Right.
Yep, for sure. So
you can all chance or don't.
Yeah, exactly. So, and again, it's rewarding you for buying. The system rewards you for holding those assets. Put aside having family nearby and all the other things that definitely play into wanting to do that. Just from a strictly financial standpoint, hold assets. It's that simple. It's just hard sometimes. Yeah. All right, what do we got next? Alternatives now and future. Crypto. It's volatile. Did we mention it's volatile? Okay. Real estate. Do you have to
and by the way, it's volatile.
Yeah, exactly. Real estate. Do you have to own it? And when I say this, I mean as an investment. Do you have to go buy 123 Main Street? No, you don't. You can do it through an ETF. XLRE. And we're going to the next slide, we're going to dig a little bit more into this one. XLRE is one, IYR is another, just different fund companies do pretty much the same thing. You can find even some very specialized stuff out there. Another alternative, inverse and leveraged ETFs. So an inverse ETF is an example that would be SQQQ. That's a triple leveraged short on the NASDAQ. Don't play with that if you don't know what you're doing. You can lose a lot of money real fast.
I was going to say it looks pretty.
Yeah. So right now it's not going to be looking good because the NASDAQ's been going up. But if you pull back to, say, 2022, when NASDAQ was down 30% on the year, it was up 70%, something like that. So don't play with these if you don't understand them.
Well, yeah, I'm looking back at 2022, Will, to your point, $242 a share. Now it's $22 a share.
Yeah, so other than that, it went great. Yeah.
Good luck with that.
Yeah, so it's down 90% since 2022. Yeah. Those are trading vehicles, not investments. Okay. So getting into those goes way beyond what we have time for today. Okay. This is from Yahoo Finance, real estate sector fund, XLRE. Just give you an idea of what you can purchase now through this ETF. Prologis, the top one, I don't even know what they do. American Tower, I'm familiar with them. American Tower, it's a global REIT, real estate investment trust. So it holds 149,000 communication sites and data center facilities. That's if you put your money into this XLRE, 9.34% goes to American Tower. And you own a piece of all these communication sites and data centers.
Wow.
So you don't have to own real estate in the traditional sense to own a piece of this real estate. Okay. On the flip side, the one right below that, Welltower, That's residential wellness and healthcare infrastructure. So it's nursing homes and hospital buildings. And
Wow.
then your local hospital that know of as ABC Hospital. Well, many times they lease those buildings. They don't own them, so you can own a piece of that. Okay, and we can come all the way down. The one I I like is public storage in here. Okay, these storage places, I don't know, man. They grow like weeds around where I live. It's like every time I turn around, they're
Same.
building another
It's
storage
like a
place.
Dollar General, man. They're always
Yeah,
attached to it. Yeah.
yeah. So, um, so 4.5% of your money goes into public storage. So this is a way inside your investment account, whether that be taxable or tax deferred, you can participate in real estate. Now,
Interesting.
you don't get the tax benefits of interest write offs, mortgage, property tax write offs within there, all those sorts of things. And you'll notice I just threw this on the bottom, the sector weightings for this particular one 100% in real estate.
Hmm.
So if you want to hold real estate because you think it's going to go up in value over time and then be diversified through all these different things like Simon Property, I believe they do commercial real estate, office buildings and stuff. Don't quote me on that. I believe that's the case. You can own pieces of all this
Hmm.
in your retirement fund. So this is some diversification that most financial planners won't talk about.
Yeah, I was unaware of that.
All right. So, just a quick reminder this is a home price index, nominal, meaning not adjusted for inflation, and real, meaning adjusted for inflation. You go back to 1970, it started off at 20
Hmm.
for the nominal. And now we're at like 250. And yeah, it goes up and down. We can see where the global financial crisis, the housing crisis hit there. Yep.
Hmm.
You got rewarded for it. And in the big scheme of things, the time to start looking at assets is shortly after they begin printing a lot of money. In prep for the show, I really had to go back and reflect on what we've lived through financially rich. I mean, think back to the dot-com bubble leading to
Oh
the
yeah.
housing crisis, right? Now, they didn't print money then, but they lowered rates from 6% down to zero, right?
Hmm.
Fueled the housing crisis. When was the time to start buying assets? A period of time after the rate decreases. When was the time to buy after the housing crisis? A little bit after they started printing a whole bunch of money. When was the time to buy at COVID? Not too long after they started printing a lot of money.
Hmm.
Hmm. Yep. There's a pattern there. Okay. This is the Case-Shiller index. This is housing. Okay. This goes back to 1928 or something, right?
Wow.
So this is a little bit of the warning side though. The red line is your long-term trend line. Look where housing values are right now compared to the long-term trend. We're way above where we were for the housing bubble.
Hmm.
Okay. And you notice this goes through March of 2025. So this is still pretty recent data. So if you're looking for an alternative, that's pretty overbought right now.
Hmm.
Not saying don't go there. There may be better choices.
Yeah.
Okay. Now, bear in mind, like that XLRE we just talked about, there, as far as I know, based on that list of the top 10 holdings, I didn't see anything in there that was residential. It was commercial.
Hmm.
So just something to think about.
Yeah, and that XLRE, it's up 38% all time.
Mm-hmm.
17%
Yep.
over the last 5 years, and you can jump in for about $42 a share. So,
Yep. And I
oh,
didn't look. I'm sure it pays a nice little yield off that.
yep.
And in that case, the yield is paying. That's how they're part of how they're financing their operation, right? They'd rather pay
Mm.
you a yield than pay a bank because they're going to pay you less yield than they're going to pay the bank. Just the way it is. Okay. But you want a piece of that pie. There you go. Okay. So position sizing. Position sizing is how much do you put into stocks, how much do you put into bonds within the stocks, how much do you put into Nvidia versus XLRE. Okay. The higher the risk, the smaller position size is the general rule of thumb, especially for guys our age. Okay. This is traditional thinking and not traditional thinking. Okay. By that, I mean stocks are more volatile than bonds. But if you think about the traditional 60-40, it has more stocks than bonds. So if we follow the position sizing that I'm putting forth here, you think, well, I want more bonds than stocks. The problem there is you're really limiting your growth.
Mhm.
Okay. The so for a long time, the rule of thumb was 100 minus your age was your allocation. So if a person was 20 years old, 100 minus 20 is 80. You put 80% in stocks. 100 minus 80, if you're an older guy, now you put 20% in stocks and 80% in bonds. That was a rule of thumb for a long, long time. Okay. But it gives an idea how a portfolio should change over time as well as a person ages.
Good point.
Okay. Risk versus volatility. They're not the same thing. Okay. You can have something that's incredibly risky, but doesn't have a lot of volatility. You can have something that has a lot of volatility, but not a lot of risk. Okay. So we're going to dig into that here in a moment. This is the part where I get non-traditional. Okay. Consider taking profits in traditional investing. This is like water being thrown at the wicked witch of the West. No, you stay in, stay in, stay in, stay in. Well, that was kind of dumb when the market, I mean, you and I started talking about stuff, Rich, right before COVID,
Yeah.
right?
Hmm.
Well, if somebody would have pulled, say, 20% of their portfolio out just before COVID happened, that would have been looking pretty smart.
Hell yeah, it would.
And that was one of the few ones where you could almost put a date on when that was happening, right? And that's very unusual. Okay. Patience is key. It doesn't happen in a day or two. Even COVID, it was still 2 months, and that was just let's shut down the world, right?
Hmm.
Housing crisis took, I think it was 4 years, peak to trough. So you got to be patient. Okay. So let's consider this within the chart here on the next page.
Okay.
Okay. So the psychology of volatility. This is kind of like psychology of money too.
Yeah.
The volatility and risk are not the same thing. Volatility is how much a price is moving up and down. And this can happen within a long-term positive. In other words, think of your standard stock chart, right? Where it moves up and down, but there's a long-term trend line going up. Well, that's still volatility within
Hmm.
the shorter period of time, right? So you can have volatility in a positive upslope, flat, or a negative, right? So here's one to ponder on, Mr. Investor Rich. Imagine an investment that had these returns. The best year was up 5,200%.
Hmm.
Worst year, it went down 71%. But over the last 10 years, the average annual gain was 82%. No brainer, buy it and just don't even look at it, right?
Yeah.
But is it easy to sleep at night?
No.
No, it's not. So your risk is very low. I mean, you're an average annual gain of 82%, but it's not going to feel good sometimes. So this is the psychology of it. So I would put out there, put a little bit in there, right? And if you're younger, maybe put a little bit more. Okay. Imagine another investment that has very little price volatility, but then suddenly goes to zero. It was
Hmm.
easier to sleep at night, but you lost all your money.
Right.
Okay. So this is where what I'm calling real diversification comes in. So let's take a look at the next couple charts here.
Okay.
Does this look like something you'd want to own, brother?
Absolutely.
So this is from January 97 through the end of this chart that I cut off was September of 99. So 2 years it went up, like 28% annually?
Mm-hmm.
No brainer to own that, right? And
What
it's
is
in
it?
the,
Pet.com or something?
nope, that would be your hockey stick. All right. So now, I mean, and there's some volatility in there. There's some pretty good little pullbacks, right? But
Mhm.
overall, it's moving the right direction for you.
Yeah.
Right. All right. Go to the next one.
Okay.
Now you get
Oh
a big
God.
pullback, right? But look, it recovered. I mean, you're going from September of 99 to May of 2000. You're back to even money in 8 months.
Yeah.
I can live with that. There's okay. Now things are getting a little sketchy, but it was good for a long time. So my sleep at night factor is probably still pretty good, right?
Uh-huh.
Next one.
Oh
That was
no.
that was Enron.
Enron. Oh shit.
Oh shit. Yeah.
Now, going back to that, when it fell off a cliff, it's like,
Uh-huh.
I want to do a little forensics. Like, why did it fall off a cliff?
Mm-hmm.
And if it's
In a,
just, they
yeah.
made a bad one day call but if
Yeah.
it's something systemic, like, oh no,
Mhm.
they're in the wrong market.
Yep. And that's what a prudent investor would do. Here's the problem within that: emotions.
Yeah.
Right. Oh, look, I bought in. Let's say you bought in right at the beginning of this chart. I bought in at 42. It went all the way to 90. It'll come back. And
Yep.
then it proves you right after that big drop.
It
Right.
tell you, if you want to go down a conspiracy rabbit hole, look at when the crash was happening.
Mm-hmm. Yep.
Look at that
So,
date. Does that sound familiar? September 11th, and all the financial records for Enron allegedly were inside Building 7.
mm-hmm.
And so there's a whole lot of. And why did Kenneth Lay just die of a heart attack like the day before he was supposed to go do his sentence? And he was best friends with George Bush. I mean, it gets wild, but
It does. Yeah. Yep. So, so this one, I mean, you had a long time. You had a good sleep at night factor, right?
Mm-hmm.
And then suddenly it went to 0. All right. So,
and I knew Enron had jumped the shark when they started betting on the weather. When they started, we got an ETF of the weather now.
mm-hmm.
Like, oh wait, what?
Yep.
Yeah, why can't we trade on the weather?
Yep.
And when you think about it, like, well, the weather does affect the price of heating oils and all these other
Mm-hmm.
kind of things. Like, all right, but it's like, no, man. Or they're maneuvering bandwidth around, and I don't know.
Yep. And this is, I mean, let's face it, they can rationalize anything away in a call the same way I can rationalize buying another car.
Yep.
So yeah, you got to be, but this is the human side, right? I mean, for a long time, I mean, you're up 28, 29% annually for a number of years.
Mm-hmm.
No brainer. I can sleep just fine. I can live through that volatility until you can't. So what I'm saying is don't conflate volatility and risk. They can be together. They can also be completely separate.
I love Don's comment here. I'm going to throw it to you. Will says,
Mhm.
if you're an active investor, you can use volatility to your advantage by dollar cost averaging instead of lump sum investing. Your
Yes.
thoughts, sir?
Absolutely true. So the way or a technique of doing that is, let's say you've got XYZ stock and it's at 100 and it's going up about, let's say 10% annually. Okay. But during that year, it typically has some pretty good pullbacks. So you can, I mean, NVIDIA is a good example of this. Microsoft, Google, and really tech companies are a good example of this. Instead of just blindly putting a little bit of each paycheck into that stock or that mutual fund, maybe have half go in there so you get a little bit of dollar cost averaging and have half just go into a money market. And when there's a pullback, buy some.
Yeah.
Buy with, and don't even take all your little nest egg there. Okay. And do that. Maybe take a third or half, because if it keeps going down, you can possibly get in a better price, or you'll be insulated from some of that pullback. So, that can explode the returns, because then you're buying it by definition. Every time you buy, you're buying with that nest egg money that you set aside. You're buying on sale, buying cheaper every time.
Good point.
Okay. Takes a little bit more doing. And a lot of people just don't want to deal with that. Well, don't complain about the results you didn't get from the work you didn't do.
Right.
Okay.
Well, I didn't really. Would you go back to 1999 and buy NVIDIA? Oof.
Oh, yeah.
Oh,
Yep.
my God.
Yep. Or there was that crappy little computer company my dad told me to buy in 1992. Microsoft, I think it's called. Yeah. I'd be retired. So, all right.
Oof.
Yeah. So now we're going to dig in. This one's going to take a little bit. And we're already at an hour.
Again.
We're at an hour and 15. So I'm going to try and summarize this here. I don't want to keep people around too long, but we're only about 4 slides from the end here.
Okay.
What's Dr. Fuller say there?
He says, I made my ex-wife a lot of money with diligent dollar cost averaging. I'm sorry to hear that, Dr. Fuller.
Yep. And dollar cost averaging works. Where dollar cost averaging, I think, can get people into trouble is through complacency. And this is where some of this comes in. I'm not saying obviously for a long time that has worked. Will it work going forward? Overall, yes, but I think we're coming up, I mean, politically, socially, economically, we're coming up on some volatile times here at some point. So this is more of a sit back and watch and try and get that big picture view of things. Not saying panic. These things happen slowly. Even if you look at this Weimar chart, I mean, we're looking at 9 years on this chart, right? We're not looking at 9 days here, guys. This is 9 years.
Yeah.
And I mean, A lot happens in there in life.
Again, what happened in 1914? With Germany, of course. World War One, and this is taking it all the way to the implosion.
Right. So I've got shares on this with quotes, guys. This would be maybe ounces of gold or however you want to see it, or just think of this as a stock instead of gold. It really doesn't matter. It's the concept we're looking for here. Okay.
Mm-hmm.
These circles on this chart don't mean anything. I just forgot to take them off, to be quite honest. So we're going to start off 1914. Rich buys 1,000 shares at $1 right at the beginning of that chart there. Okay. So you're holding $1,000 worth, right?
Mm-hmm.
So far, you made no profit, and nest egg is what I'm going to call what you sell off as you go. Your overall, okay? So, 1914, you put $1,000 in here at $1 per, okay? 1915, and I'm just kind of making these numbers up, guys, because it doesn't go that close. When it peaks here the first time, and I'm making this up, if you look at the right side of the chart, that first little peak, I'm calling that $10 a share, okay? So now you got $10,000, right?
Mm-hmm.
Well, let's sell half of it. So you're down to 500 shares. You're still holding $5,000 in the asset, right?
Mm-hmm.
Your profit is $5,000 and your nest egg is $5,000. I have no idea if they had capital gains tax back then. If this is a taxable account, you're going to have to deal with that. Just roll with me for the example here, okay? 1915. See where it goes negative there. I'm just saying it went down to 50 cents a share. 50 cents. Okay. We're just picking a number here. Okay. And then you buy back in with half of your nest egg. So you can see there you had a $5,000 nest egg in 1915.
Mm-hmm.
Later in 1915, you bought 2,000. I'm sorry, you bought 4,000 shares, $2,000. Okay. So not quite half. So now you have 4,500 shares, right?
Mm-hmm.
And you're holding 2,250. Remember, your original $1,000 is now worth half that.
Mm-hmm.
Okay. So your holdings are $2,250. Your profit on this is zero because you haven't sold anything yet. You just bought. And your nest egg's 5,000. You kept that aside. Okay. In 1916, it goes up to about 20 there, roughly. Now you got $45,000 in holdings, right?
Mm-hmm.
You sell half, you got 40. Now you're still holding 45,000. You profited 45,000 on that sale, and your nest egg's up to 50,000.
Mm-hmm.
But then look what happens after that. It craters back down.
Yep.
And it goes even lower. And I just threw a quarter on that, 25 cents a share. Okay. Now you take a portion, you buy 10,000 shares of that. So now your nest egg got dropped down, right?
Mm-hmm.
And now you're holding $47,000 worth, but your nest egg is still 50. Make sense?
Yep. Oh yeah.
Okay. So you're just bouncing back and forth on this, right?
Okay.
Now look what happens when it goes up there in 1919 there. That actually does coincide with that first red circle there. It goes up to about $8,000 a share. Now look what you got.
Damn.
And you will notice from the first trade on, you kept a nest egg.
Mm-hmm.
And you 5x'd your money right away. Right?
Yep.
So this is a technique, a little more active, but you'll notice we're not talking a ton of trades here. One, maybe two a year.
Okay, but are you going to get to the punchline on this $190 million?
Well, the problem is it's not worth much.
It's fucking worth nothing. It's worth less than $5,000.
Well, but it's worth more than. So now here's a way to look at this though. Let's just say at that time, totally making up a number here. Let's just say you owned a farm that you owed a bank $50,000 on.
Mm-hmm. Yeah, that's the thing with hyperinflation. I walk in, pay the damn thing off, and then some.
Well, even not hyperinflation, even just regular inflation.
Mm-hmm.
At 2% inflation per year, if you're running a fixed rate mortgage, just what your pay does over 30 years. I mean, at 2% inflation, your money becomes worth half as much in 36 years.
Mm-hmm.
Right? So inflation is paying off. If you got a 4% mortgage back in the day and inflation is running 2%, inflation is paying off half your mortgage for you.
Yeah.
Right. So, right. So this is just that on a shorter time scale. Right. So this is where you use that system to your advantage. This is one of the reasons why really wealthy people don't pay for stuff outright.
Hmm.
Right. So you can, if you want to take this another way, let's say you were young, like our oldest kids are. Okay.
Hmm.
Buy a house and buy a rental house at the same time if you're able. In a certain number of years, playing the percentages, you're going to get the tax benefits of owning that rental. You're going to get the cash flow off that. Let's say they're identical houses side by side. Whenever they double in value, sell off the rental and pay off your house.
Yeah.
Right? Same
That's a
idea.
smart thing to do. Yeah.
Right? Same exact idea. So, but then again, it was the holding of the asset that got that to you.
Yeah. This kid's holding assets too. How's that looking? You know?
Yeah. Well, is currency an asset?
Yeah.
No,
I don't
I
know.
would argue no, because you're
No.
purchasing every currency, their purchasing power is going down.
Yeah.
So currency is not an asset.
Right. And there's, of course, there's kids in the streets of Weimar, Germany that are stacking up bills, you know, higher than them. It's just absolutely throw it in the trash when you're done.
Absolutely.
So it's,
So, we go back to, what was it, Hugo? The guy that bought all the commodities in Weimar, Germany. He saw it coming. He bought coal. He bought all kinds of hard commodities. Made himself incredibly wealthy. Unfortunately, his kids didn't listen either and held on to it for too long.
Yeah.
Right. So, but if you think about it, Weimar, Germany, if you looked at a chart, and I wish I would have thought to throw it in there, look at a chart of the value of the US dollar since 1917. It's down 98%, the purchasing power, right?
Yes, absolutely.
So it's just a longer timeline.
Yeah.
Now it won't benefit you or I or our kids or grandkids because hardly anybody makes it that being that old. But on a shorter timeline, it's still the same idea.
Yeah.
Yeah. So hold assets.
Correct.
And when things go crazy, this is euphemistically in investing world, trading world called, buy the dip and sell the rip. So when it dips, if the fundamentals for that asset are still good, buy some. And then when it becomes the in vogue thing and it rips, sell a little. Right. Bank that. Okay. I've done this on and off with everything from Bitcoin to I'll buy and sell call options on things. Dollar Tree has done incredibly well the last few months. I'm up like 28% in 2 months ish.
Wow.
On my Dollar Tree stock. Okay. So I bought quite a bit at the beginning because it was beat down bad. And I'm making these numbers up just for example. Say you bought 1,000 shares of it. When it rips up 25%, pull your original money off the table if you want. Now you're just playing with house money.
Yeah, Dollar Tree is one of those, and it cratered for a while because they had to change the price, right? Now they sell things that
changed the price, and when they really cratered was when they mentioned on an earnings call they had to spend like a ridiculous amount of money to secure their stores when all the retail theft was happening.
Yeah.
And we could see an end to that coming at some point anyway. And as the economy becomes volatile and so on and so forth, say job losses, whatever, people shop down. So that's why I personally, not personalized financial advice, guys. I bought Walmart and Dollar Tree and sold my Target.
There you go. Smart
when
move.
people were moving up, I bought Target. That went away. Okay. So can this happen in the USA? This Weimar chart?
All day long. Oh, no. I'm so glad. I almost put this in there. Yeah. I saw this yesterday.
Yeah.
On the Book of Faces. Yeah, absolutely. Yeah. This is an awesome one.
Yeah. So has this happened here? Yeah, it has. It's just a long enough timeline nobody notices.
That's right.
Right. So this is 1933. One U.S. Gold coin was worth $20.67. Today, about $3,400.
Yeah.
So did the value of the gold change? Nope. Value of the currency changed. And this is going back to that.
Didn't it? I don't know.
Well, maybe a little. You sit around and you rub it and get shinier, right? And let's not forget 1933 with FDR's executive order. Gold went from $20.67 to $33 overnight after they confiscated all of it.
That's right. Weird.
right? So they immediately devalued it by 60 something percent, right? So,
Unbelievable.
yep.
And if you held
So,
gold, they'd put you in prison for 10 years.
yep, absolutely. So, this happens everywhere, and it's the way the system is. Every currency system is designed to run like this, and even if they come up with a currency system that is not designed to run like this, it will happen because humans,
That's right.
greed, right? And again, name a politician that didn't get reelected because they spent too much money.
Never happened.
Never happens. Never will happen because there's always somebody who will vote for the way that money is getting spent.
Yeah. Like
Right.
the big, beautiful bill, there's some great things in it, but by the time, everybody gets their pork in it, it's like, here we go. We just added another $4 trillion to
Yeah.
the debt.
Yep. Well, and there's some pieces in there about with real estate, and you can tell Trump's a real estate guy. There's like immediate depreciation. So instead of waiting 27 and a half years to depreciate residential real estate, it's immediate first year. So that is a huge, if that goes through, and commercial is a little different. It's a shorter timeline. It's a longer depreciation schedule. It's 39 and a half years, and it shortens it up. I don't think it shortens it up to the first year. You will see real estate take off like crazy from investors, including yours truly, if that passes, because I can write off, you buy a place for $100,000. If I can depreciate all $100,000 the first year, that means I write $100,000 off my personal taxes the first year.
I've got to do this since we just said 4 trillion. So thank you to the 15 folks watching us live. Really appreciate everybody being on this morning. Thank you, William Hollenbeck, for being on. I saw Walter Peterson on a moment ago. A million seconds was 11 days. So 4 trillion, if we put that in seconds, 4 trillion seconds ago was when? It was 29,679 BC. 30,000 years ago was 4 trillion seconds ago.
Yep.
We had multiple species of humans running around on this planet, and giant woolly mammoths and mastodons, and it's like, what? And and we just added another 4 trillion with this. No wonder the Elon Musk Trump feud started, because this is not what I think he was sold a bill of goods. He being Musk and myself included, man, that we're going to do something about this, and then here we are adding even more pork, even more money to the debt, devaluing the dollar even further. Like, it's unsustainable.
Well, and here's the thing: in defense of whether it be Trump, when it was Biden, if it would have been Harris, if the devaluation of the dollar slows, in other words, it becomes worth more, or the government stops spending so much money, you're talking about in very short order a recession.
Yeah,
and nobody wants to own that.
I know, but it's like, at some point it's healthy. It's going to have a cleansing effect long term, but nobody wants to take the short term pain.
Nobody wants to take the short term pain, and who wants to hang their name on it?
Yeah, the midterms will be here next year. Nobody wants that.
So, so if we go on the next one, there's one throw out there for you to consider.
Look at that.
Right. This is your gold silver ratio. All right. Purple line silver. I don't know. Reddish line is gold. This goes back to 1998. Okay. The bottom line is the gold silver ratio. So this is gold price divided by silver. Right now it's about 100, 33 to 3,400. Okay. Traditionally, as you can see from that bottom chart, that is very high. With the exception of right around 2020, that's an all-time high.
Yeah.
And we can put a little asterisk on that because gold exploded during the onset of COVID shutdowns. Okay.
I think I told you during 2020, I was buying gold and silver an equal ratio. I would, knowing what I know now, I would have been all in gold, but I was looking at this chart. Think about it. I'm looking at this chart relative to that giant spike you got there in 2012, thinking silver's going to do that again. But that was some unique market conditions that caused that giant silver spike. I think somebody tried to do a run on silver.
Well, they're honestly, don't remember that. Are you talking about the Hunt brothers by chance?
Yeah.
I think the Hunt brothers were well before that. I think that
That
went
was
back
like
to
in the 90s, maybe.
90s, maybe even the 80s, if I
Yeah,
remember right.
yeah.
Yeah, because I remember watching some of the congressional hearings on that, and it had that feel to it. Okay, so right now, if you look at just this chart, silver should now. Here's the thing. So it's a ratio chart, guys. This could mean silver goes up huge, or this ratio also gets back to more normal levels if gold comes down a lot. If gold goes down to I don't know, three, I'm sorry, let's make it $1,000 an ounce.
Mhm.
Well, suddenly this ratio changes dramatically,
Oh yeah,
right?
flips.
So this doesn't guarantee silver is going to go up like the washed up actor on an infomercial at 2 a.m. It does not guarantee that at all. Okay. So the but the point is the ratio is way out of hand right now.
Mhm.
Traditionally, this runs like 30-ish, 40-ish. Okay, and we're at 100. So I don't really see a case right now where gold goes down substantially. Maybe I'm wrong, but I don't really see that. So I see potential in silver. Okay.
Mhm.
I also see if you go to the next chart, so you got this pent up thing, right?
Yep.
This one could be a game changer for EVs. This could get me to buy an EV, electric vehicle. Okay. Samsung has some new solid state battery technology out. It uses a kilogram of silver per car. That's
Wow.
about 20x the amount right now. Right now, the amount of silver used in an internal combustion car and an EV are actually about the same. Okay. Because it's all the rare earth minerals in the batteries right now. Okay. This would 20x the silver being used in current vehicles. Now let's look at the attributes of this EV. It's they're touted as a 600-mile true range.
Damn.
Okay. Now you can go look at Tesla or whoever, and they'll say it's a 400-mile range. But you dig into that, as soon as you start turning stuff on, especially in the winter, you turn on heaters, heated seats, stuff like that, it just craters. Okay.
Mhm.
This is a true 600-mile range, full charge in 9 minutes,
That's incredible.
lighter weight, a 20-year lifespan, and also much less, from other reading I did, much less fire hazard because the rare
Mm.
earths burn so hot they can't put the fire out. Okay.
Yeah.
Silver doesn't do that. Okay. If this is even moderately adopted, okay. Oh, by the way, this is Lexus is signed on to be the launch customer for this. It's going to go into commercial stuff in 2026 and retail Lexus vehicles in 2027. Okay. If this is even moderately adopted,
Uh-huh.
what's going to happen to silver?
Going through the roof, brother.
Absolutely. So
Now,
should you invest in it? You can make an argument either way. Is it going to be volatile during there? I bet.
let me
Yeah.
ask you this. Now, I think I know the answer, but maybe I don't. When it comes to you hold the physical and then trade ETFs, or do you trade the physical as well?
I don't trade physical because you got to pay the premiums to the dealers.
Exactly.
So technique only
Right.
is the way I do it. The silver I hold physical. I don't ever plan on selling.
No,
Okay.
same.
Now here's the other side too. If you hold physical silver, you're supposed to report that on your taxes when you sell it.
Oh, really?
You do you, okay?
Yeah.
But you're also going to pay out the commissions to your local, coin dealer, precious metal dealer, whoever you use,
Mhm.
to do that. And they ain't scared to charge for that premium. Okay.
Mhm.
If you hold this inside of a tax deferred account or even a taxable, if it's a taxable account, you'll pay tax capital gains, which if you hold it more than a year, is 20% or less in that. Well, your premiums usually run about 10% for physical, I think. I don't know. I've never sold anything physical. I've always just held it. But so should you invest in this? I think you make an argument to invest in this, right? And if you do it in a tax deferred account, then you don't have to worry about taxes at all until you start pulling money down as income in retirement. How much? You do you. There's a pretty good chance this is going to be volatile. Okay, so we go back to the position sizing part of this. It'd be a smaller amount, right? And then hold it in what? Silver. Now there's a couple of silver ETFs out there. There's SLV, which is just it's a paper silver. There's another one. I can't remember for sure who does this one. It's PSLV, which stands for physical silver. They actually, if you buy shares in PSLV, they actually go buy physical silver off the market and put it in a vault.
Hmm.
So then you're also constraining supply. Hence, I always buy PSLV.
Yeah.
And the two track within a very small margin of error of one another. Okay. If a guy wanted to maybe play this a little harder, and again, this is going to be even much more volatile, this would be silver miners, SIL, Sierra India Lima, because the miners, if you think about it, if suddenly silver starts taking off, these silver miners are going to make a lot of money, right? So think of it as a leverage play on silver. Now, earlier we talked about don't play leverage plays if you don't know what you're doing, because it's going to be even more volatile. Let's say this starts to take off, and then some regulation comes out that it's going to cost silver miners a bunch of money. And silver miners are going to go down a lot, even if the metal itself doesn't move very much. Okay. If you really want to play something like this, junior silver miners. In the case of where there's junior silver miners or junior gold miners, this is your smaller outfits. Okay. This would be buying Bitcoin at 500. Okay. They're volatile. Okay. But again, if you think about your position sizing, let's just say you bought junior silver miners at some point with 1% of your portfolio. If it goes to zero, does it really hurt that bad? Nah. But if it goes up 10x, that feels pretty darn good. So your risk reward,
wish you'd have bought more.
Yeah, your risk reward, it goes there. And to your point, you wish you would have bought more. I would argue that if a investor is prudent, they would not feel that way. Because they say, I made a good risk reward decision. Because if you put 10% of your portfolio in there and it goes to zero, that feels pretty bad. Right. So I've gotten to the point now where I don't, if something really volatile like that goes up huge, I don't go, I wish I would have bought more. I was that guy not long ago. Okay. But I've gotten to the point now where I go, no, that was a correct sizing. Because I would have felt really bad if I would have put 10% of the family's assets and then it went to zero.
Yeah.
Okay. So, and the way you get to that point is by having that happen a couple times. Then real quick, you learn don't wish for what could have been. So, and all these guys, remember your position sizing. If you decide to look at, silver because of this and because of the ratio and because whatever you think is going to happen in the world, remember your position sizing. Silver is much more volatile than gold because of the industrial usage. And well, let's face it, something could happen tomorrow that changes this. They come on and go, oh yeah, that's 600, that's 60. Sorry, somebody just typoed that.
Yeah,
I don't see that happening, but it could be something crazy like that, and suddenly it goes to zero. So
sorry,
yeah. You pays you money and you takes your chances.
Before we get to the last slide, Marx's Bitcoin thoughts.
Another alternative asset. Oh, by the way, if can you go back to that slide? Because I forgot to. Sorry, guys. I was in a rush yesterday morning, I guess. If you can go back to the slide where we talked about the let's see.
For some reason, my StreamYard's not. There we go.
All right. Okay. Yeah. Start scrolling back here. We're gonna go back a ways. Keep going.
Say when.
Okay. That one.
Nope.
Go forward. One more. There you go. Imagine an investment that had these returns: best year plus 5,200%, worst year minus 71%. That's Bitcoin. But an annualized gain of 82%.
Yeah.
So my thoughts on Bitcoin, we've talked about it in general, what it is it real? Is it Fugazi? All those things. And you and I are of different opinions on this, Rich. I don't care if it's Fugazi, as long as it keeps going up in the meantime.
Yeah. I'm
just here to make money.
Yeah.
That's the only reason I play the stock market and talk about all this stuff and think about this stuff. I just want to make money. Yeah. I really don't care if NVIDIA is a good company or not. I don't care if they like puppy dogs. I just want to make money.
Yeah.
So no,
there's
you're totally not put us off topic at all, Mark. It's a great thing to talk about, and I should have had
yeah.
that in there. What that asset was.
Look at
But
it.
look at that chart. What's your sleep at
Yeah.
night factor, right?
Yeah.
Overall, my thoughts on Bitcoin is as long as it's denominated in dollars and it's a risk on environment. Bitcoin does very poorly when people get scared.
Mm-hmm.
Okay. As long as it's a risk on environment, meaning people are putting money into stocks, they see things going up, they're willing to take risks, Bitcoin will do well. When people get scared, they're going to pull back.
Yeah. So here's a little harbinger of the Bitcoin thing.
Mm-hmm.
So there's some on a road near us. There's years ago they built these Bitcoin mining things right next to a power plant.
Mm-hmm.
And at first they were shiny and new and beautiful and blah blah blah, because when you were mining Bitcoin, you were making more Bitcoin and it was worth more to you. But eventually, that number, the way Satoshi Nakamoto, whatever his name is, set it up, it eventually trickles down. And once all the Bitcoin has been released, and we may have hit that number already, I don't know if all of it's been released as far as the mining. No. It hasn't hit yet. No. Okay. But those Bitcoin mining things look like crap, and nobody's maintaining them. You know, some of them aren't operable anymore.
Yep.
So eventually, if people aren't maintaining the infrastructure, the blockchain, it could go to nothing. So
yep.
And again, I differ from you in the sense that I want to understand it, and then the more I understand it, even if it is making money, it's a tulip, and I can't risk. Well, maybe that goes to position sizing, right?
Bingo.
Bingo.
If
it's 1%, what do I care? 2%. But if I'm running 30% and tomorrow Bitcoin goes to 0, and I gotta go to my wife, the tears streaming down my face, and she locks me out of the house.
Yeah,
that's a problem.
Absolutely, and you hit it. You hit the nail on the head. It's position sizing.
Yeah.
So, and Mark's point is exactly dead on why that's happening, because it's costing too much to run. There's a reason China is building power plants like crazy.
Yeah.
And many of them, much of the capacity is going to mining Bitcoin. So what's this one say?
I love this one, man. This is not failure. This is, the guy that overanalyzes and never takes a shot, right?
Yep. And this can even come down in investing to position sizing, right? Let's say the next Bitcoin rolls around, whether it be a crypto or whether it's just something new, right? Throw a few bucks at it. See what happens.
And you know what's this would make it more accurate if there were some arrows that actually missed the target and they're just kind of hitting all over the place, because not everything you swing at is going to be a hit. I mean, you're not always going to hit the target. Sometimes you're going to completely miss it. But if you're just
I mean, let's just say you bought your first Bitcoin at $500. That's me. I bailed out. Okay, at like 18,000 or something. Pretty darn good return, right?
Yes.
It could be 100 on the back. Could be 108 right now, but coulda, woulda, shoulda. Right. So, whether that be, Mark just threw Ripple up there, maybe. I'm not saying be irresponsible and throw a little bit of money at everything. Be somewhat knowledgeable on it and go, okay, I mean, I'll put, maybe you pick up one day of overtime that you don't really have to make the family budget, don't have any obligations to. Throw it in there, right?
Yeah.
You don't know what it's going to be, right? So to the point of this is, the not taking your shot. To whoever put up the Michael Jordan thing, you miss 100% of the shots you don't take.
Yeah.
Jordan didn't make every potentially game-winning shot. But whose hands did you put the ball in if you had a choice? Michael Jordan, right? So, and at one point he was interviewed and they asked him what was the percentage of times you missed the potential game-winning shot, and he knew the number off the top of his head.
Yeah.
Right. So, it's one of those things where you're playing the odds, and it goes back to what you said about with say Bitcoin and position sizing, 1 or 2%. I am not full disclosure. I am not running much more than that of my portfolio in Bitcoin right now.
Yeah.
Okay. Because I don't want to deal with the volatility of it. I'm in my late 50s. I don't want to deal with that,
Yeah.
but I sure would like a piece of the action.
Hmm.
Right. So, yeah. What's Alan say there?
Hey, Alan's got a great point. Says big problem with Bitcoin mines is the general public don't want them in their back door due to noise, eyesore, and possible property being devalued,
Mhm.
zoning wars with local government, etc. Yeah,
Yeah.
he's absolutely right. But and here's the thing: when I started, I read the book, The Gold Standard Bitcoin. I can't remember what the name of it. Fantastic book. Anyway,
Yeah. Bitcoin standard.
the Bitcoin Standard. Thank you.
Mhm.
And then I started looking at other cryptocurrencies, and I found some that I thought were far superior to Bitcoin. I'll throw one out there, not financial advice, Ocean Protocol. I thought, man, this has got legs underneath it. This is better, in a lot of ways than Bitcoin. And Ocean Protocol's done nothing,
Mhm.
in the 5-6 years ago that I started looking at this. Cardona,
Mhm.
Ethereum has done well, but there was a problem with its code, and it got
Mhm.
forked and things of
Yep.
this nature. So,
Yeah.
and then now that you have, Bitcoin is probably the only one I would get into because it doesn't have a board. It's just it
Right.
is what it is, right?
Yep. Exactly.
Any
So,
of them that were started and they have a board of and they can change it and do
mhm.
manipulate it, like
Yep. Want nothing to do with that.
no,
The reason Bitcoin, in my opinion, the reason Bitcoin is working is because it's limited.
yep,
Why
that's
does I
right.
mean let's face it, it just is. Gold isn't limited.
Hmm.
There's a reason there's gold mining companies. They're getting about 3% more of the overall supply of gold every year. So
Hmm.
it's it's not a fixed amount, but the growth is limited, and therefore there's value in it, right? Unlike
Yes,
currency.
yeah, exactly. That print the hell out of that stuff. That's
Exactly.
pristine.
So that's really what it comes down to, guys, is you gotta hold some asset.
Hmm.
And if you hold just one asset, I mean, I don't care whether it's housing, Bitcoin, XYZ stock, a 60/40 portfolio, you have to hold some sort of asset in the depreciating currency.
Hmm.
That's just, I mean, you can go back over every empire. Look at the Romans. Look at the Germans with the Weimar chart we studied,
Hmm.
right? Look at ours. I mean, went from $20 an ounce to 3,300 an ounce in US dollars.
Hmm.
So, and if we look at the chart for the US dollar, it's just accelerating
Yeah,
because it has to.
it has to. It reminds me of Alice in Wonderland. Was the queen that had to run her ass off just to stay in one place? That's the
Hmm.
same thing.
It's the exact same thing.
Yeah.
And let's face it, we can blame the politicians, and they deserve a lot of blame for this. But what do you think would happen with a politician that went up in front of a bunch of people at a rally and said, "Okay, guys, here's what we need to do.
Hmm.
We need to stop spending money like this. We're going to cause a really bad recession, possibly a depression. A lot of you are going to lose everything you own, lose your jobs, and your kids' futures will be great."
Mm.
They're not getting elected.
No,
So who do you really blame? The politician or the people?
human nature, brother.
Absolutely.
Yeah,
Yeah. And we're all guilty of it,
yeah.
right? I mean, let's face it, I'm looking at the big beautiful bill going, if my initial research is correct about the real estate side of this, I'm going to react to that and bend more towards real estate.
People respond to incentives.
Exactly.
Yeah.
So, and let's face it, I mean, at this point, I'm inclined to believe what I've read so far about that is true. And let's face it, Trump's a real estate guy.
Hmm.
And I did get some perspective on why Trump hates Powell, because Trump found out about negative interest rates. Remember when Europe went to negative interest rates um, during the housing crisis?
Hmm.
Literally, if you put $1,000 in the bank in Europe at the time, you'd pull 900 and something dollars back out a year later. And if you got a mortgage, it was at a negative rate.
Wow.
Trump went to Powell when Trump 1.0 was happening and said, "Hey, I want some of this." And Powell went, "No."
Hmm.
And that was when they split. Because let's remember, Trump nominated Powell to be chairman of the Fed, but Trump's a real estate guy. And he went, "You know what? I want a piece of this negative interest rate stuff." And Powell went, "Yeah, no way. Forget
Yeah.
that." And that's when their split happened.
Well,
So,
again,
it
it's
yeah,
like somebody has to be the adult in the room. and to be the guy that says no, can't have
Yeah.
it.
Problem is they can't get elected.
No, you can't eat the damn cotton candy. I told you no. You're gonna have a stomach
Yeah.
ache, son.
Yep.
You know?
And but nobody wants to hear that.
No, they
And
don't.
the entire system is built around devaluing currency. And you know
Right.
what? Every currency system in history has been built around that.
And every fiat currency system in history has crashed eventually.
Hmm. The problem is trying to figure out when that's going to happen.
Right.
So in the meantime, you play the game that's in front of you,
That's right.
right?
And to use your game metaphor a little bit further, it's like chess. The chessboard, there's nothing concealed, like the game
Mhm,
battleship or whatever.
mhm.
I can't see yours, and I'm just making kind of educated guesses, and you can't see mine. And with the game of chess, the board is out there. It's the
Yep.
same. We can say it for what we're in right now.
Mhm.
With Google and everything, there's
Yeah.
go. There's nothing hidden.
Yeah.
In the tax code, it's 17,000 pages online. If you want to read it, read it. Not,
Yeah.
or pay somebody for
Yeah.
their expertise, but the rules of the game are clearly etched out there for you to see.
Yep.
Go forth and do good things.
Absolutely. It's just it's the game.
Mhm.
It's no different than playing the tax game. And the difference between a tax strategy and a tax loophole is whether or not I can use it.
That's
If
right.
I can use it, it's a strategy.
Mhm.
If Rich uses it, it's a damn loophole. It needs to be
We need to
closed.
close it.
Right. And that just goes back to the whole political side of all this crap.
Yeah. So, Will, again, you've given us a lot to chew on this morning, my friend. Thank you so much for all the work you put into today's show and this 5-part series, the Meltup, man. It's been a hell of a ride.
Oh, I'm glad you enjoyed it. I enjoyed putting it together, and I learned some things too, which is always great. And
Yeah.
so next week, we've been talking about doing an AI show,
You
and
want to do it?
maybe let's do that, and let's
Okay.
maybe dig into some of the. We'll see where this LA stuff goes too,
Yeah.
and see how things are looking there because we're coming up on summer.
Summer
Yeah, I guess
Love
technically we're in
2.0.
summer. Yep. Could it turn into that? As I was telling somebody yesterday, all it's going to take is one police officer or ICE agent to be perceived as stepping across the line,
And burning down again.
or actually step across the line, right?
Yeah.
So, will that happen? I don't know. I mean, the people who want to turn this into Summer Love 2.0, they got to find the right piece of video, the right circumstances. Some things have to come together for that to happen.
Just this morning, I saw on X, Trump had tweeted something like paid provocateurs or something like that, as if like,
Okay.
oh, I caught one. So it'd be interesting to see that because once again, we're seeing the piles of bricks just
Hmm.
materializing, 2 blocks from where the certain checkpoint is. And this, I
Yep.
don't know, man.
Yeah. Oh,
Yeah.
they've got their playbook.
Yeah.
you know um and we'll see how it plays out, and it's we just have to react to whatever happens.
Yeah. Make sure you got your vehicle ready is all I can say.
Hmm.
I mean, seriously, I don't give a shit where you live. If you live in
Yeah,
any kind of urban area, it could definitely happen where you live. So, uh,
absolutely. Have
good
that ready.
tires, plenty of gas,
Yep.
got your go bag in there, and think about those lines in the sand, man.
Yeah.
Are you going to let them pull your kid out, or what are you prepared to do? Just to
Hmm.
kind of circle it back to our self defense roots.
Absolutely. Absolutely. And come with those lines in the sand, and you know don't don't overthink it. When that
Hmm.
happens, you've got a well thought out plan. You have to react. You have to be responsible, act within the law, but don't say that, oh, I'll go a little bit more, I'll let a little bit more happen. You gotta protect your family.
Amen.
So
And with that, sir,
the fight is coming. Be ready.